Hello and welcome to the Tradesight Stocks and Futures Market Preview for Tuesday, the 15th of December, 2015. Can you believe that? We are halfway through December and heading into the final stretch of the year. If there's 3 trading days left that could give us a good opportunity, it's going to be these next 3. After that, the year kind of wraps up. Might get some chance maybe next Tuesday. After that, it's pretty poor. We'll talk about that over the weekend. But in terms of this week, we do have the 2-day Fed meeting starting tomorrow. We've got the CPI number in the morning. That can move things around a bit. We've got some other minor data points that shouldn't do too much. And then Wednesday, obviously, we've got the Fed announcement itself. We've got some housing data, got capacity utilization, industrial production. Thursday, things start to die down in terms of data. And, of course, somewhere in here, hopefully an options unraveling move for triple expiration. They might save that till after the Fed, whether that means in the afternoon, and those are the annoying ones, the afternoon after the Fed on Wednesday, where we just have the last 2 hours of play and they kind of put the options unravel in that, or Thursday, which would be the better option for us from a trading perspective. Here's a look at the ES. This is the S&P E-mini front month futures contract. This is the proper way to trade, and look at the technicals on the market. We did sweep the lows of the prior day this morning to start the week, but then came back and basically didn't do much for the session overall. Had a small gain net. You can see that we've held basically, even though we bounced off of it, that red static trend line from the 9-bar move up back in October, November, and late October, I guess. Notice how both of those 9s, that one there and the one that ended at the end of November, gave us the top in the market twice. And so obviously Santa Claus rally has not been happening this year. Very strange timing. We got the low in October a little sooner than we usually do. And then now we're not really rallying into the end of the year when people aren't usually selling. One overall side effect of that is, or reason for that is because if you look at the market for the year, it's not really up. We're pretty much right where we started. So the market is not up so much that people wouldn't be selling stocks in general. However, there are a few stocks like we look at every day, Google, Amazon, the ones that are up big, and they continue to, every time the selling pressure lays off the market, they bounce pretty heavily here because nobody wants to sell those stocks and lock in a big tax gain for the year. We'll look at those in a minute. Crude oil down again, $36.15 was the close after dipping below 35. Hard to believe. Gold fell $14.40 near the lows. S&P ended up gaining 9.5 points after being down for part of the session, but overall fairly lackadaisical session. Nasdaq was up 32.6 after being lower. NASDAQ volume was 1.9 billion shares. It's higher than all of last week, which is interesting because today did not feel like any kind of movement. Where that volume was is hard to say. SOX bounced right off that red static trend line and lost 4 points overall. Biotechs were up 8. That's nothing for that index. The VIX retreated back to 2273, down 166. Could not get a close above that green static trend line. Always interesting to see the secret Comer tool work on something like the VIX. Advanced decline ratio ended up negative. This is what's interesting, right? So we've got the S&P up 9 and the NDX up 32, but the advanced decline ratio on the broad market on the New York side was negative 1,514. That means that 1,500 more stocks closed down than up, even though the S&P was up 9. And the advanced decline ratio on the NASDAQ, negative 838, even though the NASDAQ 100 was up 32. So no breadth in the market, even though we managed a positive close after pretty much a boring session overall. We'll look at that in a minute. Google closed up 12. Again, even though breadth is bad, those stocks that have been up for the year, here's Apple down 70 cents. Those stocks that have been up for the year, like Google and Amazon, up 17 on Amazon, almost 18 points. Big winners in this, even though the market breadth was horrible because this is the stuff nobody wants to sell. Netflix up 1.76. And then let's look at the intraday action, 5-minute candles. And again, look at this, really nothing here. We opened flat, fairly flat, drifted lower, bounced back. We were flat over lunch, stayed flat, and it was only in like the last 20 minutes of the market that we popped up about 9 points, and there's your whole gain for the day. On the NASDAQ side, not much different, perhaps a little stronger, a little earlier, but not much. And we ended with the 13 Comer sell signal on the 5-minute chart. We'll see how that plays out tomorrow. All right, so again, as I said, for tomorrow, we start a 2-day Fed meeting. That's probably not going to help us too much, but we've got enough data in the morning, and since it is a 2-day Fed meeting, maybe we'll get some action here early. Wednesday might not be much until after the Fed announces in the afternoon. Maybe we'll get a move off of that, especially if, well, everybody's expecting the rate hike. We'll see if we get it. Could get a move because of it either way. Thursday, I think, the better trading day of the week, the more obvious one. Friday, triple expiration. Nothing's going to happen. Everybody go see Star Wars. Charts, as usual, brought to you by eSignal 12. If you've not taken a trial of our services, feel free to do so. It's not too late to buy one of our mentorship programs and get the tax write-off this year for the next 6 months of learning. And we'll be in the lab helping you out. Have a great trading Tuesday.